Welcome. I am the FX Savant, and in this video, I want to show you how to use the Fibonacci tool properly and how it can help you to find profitable and favorable setups using multi-time frame analysis and structure. That's it. You use those three things. I think you can find some really good setups, man. For my example today, I have a Euro JPY trade that was about 195 pips. So we'll call it 200 pips, 3R take profit with no drawdown. So literally sniper entry, only using multi-time frame analysis, structure the right way, and the Fibonacci tool. If that interests you, do me a favor, drop me a thumbs up, maybe even subscribe. It'd be greatly appreciated if you do. But with all that said, let's get into the video. We got to do a multi-time frame analysis just like always. So what are we doing? We're starting on the monthly just to get our direction. So all we're really doing for this is just finding a direction, seeing where the market is headed. Well, we've recently had an impulse to the upside. We know that the market can't move in one direction forever, and after an impulse, we need some sort of correction, a retracement, exhaustion, something. And where is the market most likely to come to after an impulse to the upside? It's most likely to come back to most previous structure broken. So the most previous structure broken is this area right in here, which is also previous resistance, which should now act as support. So we have room to go. This is on the monthly. Of course, we're not trying to take this whole move down, but it just indicates that we have room to go on the monthly. Let's drop down on the weekly. What can we see on the weekly? On the weekly, we can see that we have been in impulse correction, impulse retracement, impulse kind of move, further confirming our bias of our monthly of now we have more room headed down to go. Now this is when we start to get into our Fibonacci's, and before we do that, let's talk about the Fibonacci. What is a Fibonacci? Fibonacci is a retracement tool, so that's what it is. It's for retracements. The Fibonacci, and mind you, I'm speaking in a general term, so this is what most people do, and when I by most people I mean most banks, most hedge funds, most of the big market players in the market are going to use the Fibonacci in this way. That's why it's effective this way, because the majority of the people are using it in this way. And what is that way? Well, say we have a move to the downside, an impulse to the downside, some sort of impulse to the downside. The Fibonacci tool is to help you find areas in the market where the trend is likely to continue. So it is exactly what it is, a retracement tool. It's areas in each one of these levels, 38.2, the 50, even though it's not a Fibonacci level, it is just half of the move, which is important within itself, the golden 618 ratio and the 786 ratio. There's also the 100 and the 0, but I don't have those highlighted, no need it for those. But these levels in the market are what the majority of the market players are using. And these levels, as you will see if you use it in this way, is that a lot of the time these are the structure areas where the market does turn around and continue the trend. So if we're moving down, we take our Fibonacci on the impulse from the high to the low, and we're looking for areas that are most likely going to reject and continue to the downtrend. Okay, so how do we identify what level to use, you may ask? You may say, hey, you give me these levels, I got 4 levels, how do I know which one to use? The way you're going to apply this is you're going to have to understand structure, because the level that is most likely going to be used in your Fibonacci retracement tool is the level that most likely aligns with structure, with previous structure. So if we have just broken level, and if we impulsed below a previous support level and we broke and closed below it with an impulse, and this was the level that was broken and closed below, we would most likely come back to this level before we continue to the downside. Why is that? Because structure is king. Structure runs the market, and this is a tool. This isn't an indicator, this isn't magic, this isn't a crystal ball to predict the future. It's a tool to help you. So you want to use this as a tool. You might say the gold 618 ratio level is the golden ratio level, so the market should go there every single time, and that should be the one that gets rejected. No, structure is king. You can't use the Fibonacci tool saying that the Fibonacci tool said that this is the golden ratio, so this is the one that should always work. If it hits this level, this is the one that should be rejected. Sometimes the market does not respect this level. It's not 100%, it's not exact. Sometimes the market breaks above the 618. So you don't want to use it as your end all be all. It is a tool, and that tool is to help you analyze structure in order to put yourself in a good position with a favorable risk to reward. Okay, now we have our levels and we understand what the Fibonacci tool does. It helps us find an area that is most likely going to help the trend continue. On the weekly, this is where we're going to start using our Fibonacci tool. Okay, what can we notice here on the weekly? Well, we had a recent support here. We would like to see it broken, close below, and act as resistance. If we take our Fibonacci tool, what can we see? The level that lined up most with that is the 50. And what is the level that was used on this retracement? Once the market came back into this area, what did we use? We used the 50 to get low. Okay, so we have that. We're stepping down in this market. We're creating lower lows and lower highs, and that's on the weekly. On the daily, what can we identify? On the daily, we can make it a little more exact. We can get our Fibonacci tool out right here, and what can we see on this recent impulse to the downside? And remember that this candle, you may say this candle isn't the same color. Yes, but this is only one candle, and when one candle is not related to the move, that candle is usually used as structure. Supply and demand, support and resistance, whatever you want to call it, is used as structure. But speaking about our Fibonacci level, we also have indication that the market wants to move down because we recently had an impulse to the downside. The market is having a slow retracement coming up to the 786, which is the final level. 786, now hear me out, the final level that you want to see the market respecting. If the market breaks above the 786, usually we're going to impulse to the upside, or we're going to continue this impulse. So we may have an impulse down and an impulse up if we break and close above the 786. But what did we see here? We're seeing that we're getting a wick tap here, we're rejecting it. Not only did we reject it to this 618, we ended up breaking and closing below the 50. So once the market starts doing this, it's usually stepping down in levels. Usually it'll tap one level, tap another level, tap another level, tap another level, then continue the trend. That's sometimes how the market works. Knowing that, that's what I'm seeing, that's what I'm identifying. So I can say, okay, I can set myself up for recent support, now turned resistance in this area, maybe an ideal position of where I want to get in. Let's get a little more in detail by dropping down to the 4 hour. We're still on the 4 hour time frame. We know we've recently rejected the 786 of the overall impulse on the daily to the downside. Let's get in a little more. We know we've broken structure below here. This was recent support broken. Now we want to see it acting as resistance. Let's try to take our Fibonacci from the high to the low of this move and see if we can pinpoint a good entry. Well, what do we know? We know we want to see these levels being tapped, respected, and then continuing to the next one underneath it. Tapped, respected, tapped, respected, tapped, respected. So if we get a pullback in this area, we can see as well on the 4 hour, if we just draw a simple trend line, trying to touch as many wicks as possible without cutting the candles, we can see that we kind of missed our trend line break right in here. We had a retest, come back, retest it, and this was our impulse to the downside on the 4 hour. We know that we've broken structure. We want to see our previous structure being tested and acting as structure once again. So we have our area marked out. Okay, let's drop down on the hour. What can we see on the hour? It's basically the same thing, but what are we getting at? At the 618, our golden Fibonacci ratio is the one that is aligning best with structure. We have a candle in here that is not related to the move. That would also further help our trade setup, as this is structure. Like I said, if the candle is not related to the move, it is a structure candle. So structure is in here. You can see the support was in here, indecision. Then we created this move to the downside. You want to see the market move back to this area and respect it as resistance on the next time. So, and that is at the 618, the golden Fibonacci ratio. So what do? We know that our Fibonacci gives us information on the retracement, on where it's likely to stop. And if it's able to do that, well, let's use our brain, think outside the box. The Fibonacci ratio may be able to give us a target as to where the next impulse will go as well. So there's another target to see, hey, yes, we want to get in after the retracement on the next impulse, but how do we know where the impulse is going to stop? Well, we can take our Fibonacci, and I can zoom out on the 4 hour or the daily to make it clear that we're taking our Fibonacci on the retracement. So this was our impulse to the downside. We took our Fibonacci and found that the 786 was getting rejected from up here. We want to see the 618 get rejected, the 50, the 38.2. But now if we want to figure out where the next impulse is, because this is a retracement, if we take our Fibonacci on this retracement, it may give us an idea as to where the next impulse may stop. Little gem for you right there. So let's do that. Let's take our Fibonacci from the high to the low of this move, and let's try to figure out some targets. And what can we see? We see that we have the negative 27, the minus 272 on the Fibonacci ratio, and we also have the 618, which are the minus 618, excuse me. We also have the minus 618, which are both targets as to where the next impulse may stop. So how can we use this to find a good position that gives us a favorable risk to reward using multi-time frame analysis and structure along with our Fibonacci tool? Well, we can see that, hey, if this was the retracement, this whole move right here was the retracement, we don't want to see price go any higher than that. So if I know I want to get short because we are in a lower low, lower high market, we're making lower lows and lower highs in this market, we want to see this trend continue. The trend is our friend. We're breaking structure. We broke a trend line, counter trend line to the upside. We broke that. that. Recently broke structure, broke support, want to see it be retested. So if we know we have targets down in here that we want to see hit, but if we have targets down here at the -27 and we know we don't want to see structure, or we don't want to see the market break above structure, we know we can place our stop above structure where it needs to be, because if our stop is reached, we don't want to be in the trade anyway because we're breaking structure to the upside. That's not ideal for a short trade. And we also know that the market is most likely going to stop here at the -27. So we need to find a good spot that would give us a favorable risk to reward, which is a 3 risk to reward when we're swing trading. You want to try to keep that. That is the holy grail of trading, is a 3 risk to reward, or having a favorable risk to reward along with your win rate. So this would say, hey, if I can get in right here on previous structure, enter in short here with the stop above the high, my target's here, using our Fibonacci tool to find out where the next impulse may go, this will give me a 3 risk to reward. Okay, so what do? We pull up where I sent out this trade, just so we know that this ain't no fakes. You know how I gotta do, y'all. 130.015, TP everywhere, TP on screen, entry on screen, SL on screen, stop on screen, you know, everything right there for you. Sent out in the morning in the AM after we had an impulse to the downside. Let's let it play. What happens? Bingy, get tapped in one time right there, and then, you know what I'm saying, it's no. But yeah, then you're just chilling. We risk free at this point, and then what happens? Price comes close to TP, pulls back a little bit, then ends up hitting TP. So there you have it. Only using the Fibonacci tool, structure, and multi-time frame analysis, we found a 3R risk to reward trade that ended up hitting take profit for 195 pips, a little over 195 pips. Yeah, all you needed was patience to sit through it, man. This trade took about 2 weeks. So yeah, patience. It really wasn't tested the entry or in drawdown at all once you entered into the trade, so that's a plus. But yeah, man, trading is not hard. Don't make it complicated, just make it consistent. So I've taught you how to have your Fibonacci if you go about it the right way, analyzing the market and applying everything that you've learned so far, at least from this channel. What I've tried to provide is a way for you to kind of build your trading up to where you can consistently analyze the market and take profitable trades using good risk to reward and just everything you've known, everything you've learned. So yeah, hope this video helps at least one person, man. That's all I really got. That's all I really want to do. If it did help you in any sort of way, if you learned something from this or you just enjoy the content, please do me a favor and make sure you like the video, share it to someone. If you think someone could use this information, share it with them. A subscription would also be very helpful. I ain't saying you gotta subscribe. It would be nice if you did. My barber said he would give me a free haircut if I got it to 1,000 subscribers. So let's try to get on that. Let's try to work that. Other than that, I hope you have a profitable day on and off the charts, man. I holla.